Hello, everyone. Welcome to our Let's Talk Tax webinar. It's the 11th of November, and we will be recapping the autumn budget by the wonderful Chancellor Rishi Sunak. And we'll just be discussing the highlights of that budget and how it's affecting UK businesses. Joe, if you could please turn to the next slide. So the Chancellor had a number of interesting changes he made to the budget to boost the economy. As you're all familiar, probably tired of hearing now, we're coming out of a pandemic and we need to re-energize and reboost businesses for development. One of those key areas he focused on was the research and development tax credits. Now, businesses can now also claim for the cost of data and computing stored in the cloud. So you're thinking about your AWS, Amazon fees, and other site internet storage fees. Of course, that obviously increases the bandwidth for businesses to claim, and we're expecting that this would allow many more businesses to come forward because so many businesses that want to do claim for research and development tax credits find that they fall short on many areas. So that's another area they can claim for. Currently, you can claim on staff wages, subcontractor costs, lighting and heating, and other items there. We also saw a boost with the capital allowances. The extension of the allowance for the 1 million annual allowance for businesses, group of businesses, if you're in a group. That was extended till March 2023, and that's a really welcome boost further to the Chancellor's earlier boost to capital allowances with a super deduction tax. We also add capital gains tax, the extension of repayment of capital gains tax from 30 to 60 days. I'm sure that's a welcome boost to all those who flip properties and who obviously want to be in a position where they can manage their cash flow properly. So I think that's a really welcome boost. And there are no changes to the capital gains tax rates in the year as well. Corporation tax planning is also, as you already probably know, increasing the corporation tax rates from earlier in the year. You did mention that, and that's still on course to happen. But the big boost is for banks who get a 3% reduction in their charge, so that the total corporation tax paid by banks falls from 20 to 25%. Inheritance tax and personal tax also got a bit of a boost. I know a lot of people are more concerned about the personal tax with national minimum wage increasing for 23 years. People 23 years old and older, jumping up to £9.50 per hour. The good thing about increasing the national minimum wage is that people will now be able to afford more and obviously buy more, and businesses can make more. I always use the example of a restaurant who pays well, now having those restaurant staff able to count them as customers because they can now patronize their restaurant themselves. Cars and tax, we have seen a number of government strategies to get us all to be more energy efficient with the cars we buy and replace existing cars with, so that we're buying energy efficient cars, and also taxes on different road taxes and duty taxes on those high emission vehicles. And we're seeing that as a recurring theme in all budgets and all tax talks. Joe, if you could kindly move to the next slide. So with R&D, the SMF relief introduced in SME relief introduced in April 2000 initially, and we also had the large company relief also in April 2002. So with the R&D, the grant subsidizes obviously business costs, allowing businesses to claim to 30% of the operating costs on some key items like wages and salaries and subcontractor costs, as mentioned before. Now, with this boost to R&D, we will see businesses being able to claim on cloud computing and storage costs, which also means that businesses that critically do not have employees can also claim on those computing costs, those cloud storage fees, which usually are a bit high, especially if you are a SaaS business and with most of the operations in the cloud. This is a welcome boost. Next slide, please. So in terms of capital allowances, the businesses can currently take advantage of both the super deduction and the annual investment allowance to reduce their bills. This is a welcome boost as businesses file corporation tax. Now they've got both of them to look at. I know for super deduction tax, we only came through in April. So in terms of business purchases, after April, all of those will be qualifying for businesses who are filing from April 2022 for the year. From April 22, they'll be able to benefit in full from those corporation tax reductions. The new super tax deduction definitely helps, and it should mean that businesses are able to increase their capex budgets and actually go to town with increasing and improving and expanding their businesses, allowing them to claim more, writing down allowances in the future, and reducing taxable profits for a number of businesses. Everybody qualifies for this, so it's something every business should be getting into. One, it allows the manufacturing sector to gain traction and to get itself out of the doldrums, and really gives it a big push and a big boost to help businesses there. There are also other small items like laptops and office furniture that every business can also access. This can also be used to claim on the super deduction and the annual investment allowance. Next slide. Capital gains tax is a tax on profits when you sell or dispose of an asset, as you probably be aware of. It is currently 18% and 28%, depending on whether you are a basic rate payer or higher rate or additional rate taxpayer. And it is usually levied on individuals rather than entities. And with the increase in the capital gains tax repayment period from 30 to 60 days, people who are selling assets have longer times to file and pay those capital gains tax bills. Every person in the UK qualifies for £12,800 of personal gains tax allowance every year. So your tax on the taxable portions of your profits on the disposal of an asset will first be reduced by the annual allowance if you've got any left before tax is assessed. Business asset disposal relief, formerly known as entrepreneur's relief, has a lifetime limit for qualifying gains of 1 million. And this also means that for business owners that are looking to exit their businesses, they're in a good position to do that because the first 1 million of their disposal receipts will not be taxable, and that means that they pay less tax than they would if they were paying tax on the whole of the whole portion. But this has been in place for a while. This is just an extension of the business asset disposal relief. If you plan on selling a business or significant shareholding, it could reduce the amount of capital gains tax you pay to just 10%. Yes, it could, if you're claiming on the business asset disposal relief. And it also means that you have an opportunity to develop and grow businesses and sell them and move on and create something new if you want to. Next slide, please. Corporation tax planning. Corporation tax in the UK is currently 19%, but for some highly profitable businesses, this will rise to 25% from April 2023. Well, this has been the case. We've known about this since April, earlier in the year, when the first budget was released. The plan is to help the government recoup some of its investment in businesses during the pandemic, and it's a welcome boost because we know that a lot of businesses have been able to stay the course, have been able to keep going because of government support. Obviously, it is a tax and it increases the payouts from businesses. But we've got a bit of time to get to that time when we were paying the higher corporation tax rate. We expected this when with the government reliefs that was received from businesses. But it's also an opportunity for businesses to then also access other tax benefits they may be able to access to reduce their corporation tax bills. So doing corporation tax planning early in the year rather than at the end of the year, it's wise, using all the tax benefits available with capital with your capex, with your capital allowance, for example, using pensions for those who have pension liabilities, accessing the business rate reliefs, accessing all the different support programs out there, and taking action to reinvest on time and properly for the business, for the growth of the business. All of these things will help to reduce effective corporation tax rates. The inheritance tax is payable at a rate of 40% on estates worth over 325K at a date of death, although this will be affected by certain rules and reliefs. It can also become due on certain lifetime gifts of assets at a reduced rate of 20%. Inheritance tax is always an area where people, want to protect because they've been passed assets from relatives who've possibly paid tax on those items before, and before they were passed on to them. And it's just wise to plan for inheritance tax. Usually, it is best to transfer gifts while the owner, the original owner, is still living, so that there could be effective tax planning on that. Usually, the advice is to transfer it at least 7 years before, but nobody knows when they're not going to be around any longer. But the earlier you do any gifting you want to do, it's always better because the tax reduces the longer the assets has been transferred. Next slide, please. So just providing a few personal tax tips here for those who are directors of their own businesses and running their own businesses. It's always wise. I know a lot of people sort of tend to take more of their dividends than their salaries. But a pension, maximizing the annual pension pot is definitely important. One is not just the fact that there are tax benefits to the reductions you get from it being a deductible expense for the calculation of your corporation tax, but it's also the fact that you're being able to save for the future and provide for yourself in the future. It's also wise to make the most of the ISA allowance every year, making the most of that because it's tax-free savings. The salary benefits using the personal allowance and making sure taking the maximum amounts on that, and making sure that you're balancing that, and also accessing all the benefits you should be accessing. In terms of dividends, taking up to the maximum dividend allowed in the year up to the basic rate limit is always a wise one to do. Doing transfers from of the personal allowance if the spouse is not fully utilizing their personal allowance. Doing inter-spouse transfers has always been available to people. Up to 20% of the personal allowance annually can be transferred between couples. So that should definitely be used. In terms of dividends, making sure that this is planned in and taken through the year, and avoiding the build-up of any directors' loans is always something we advise, so that there is no directors' loans tax. Next. So in terms of employees' taxable benefits, this flows to the P11D. The cars and tax and fuel have always been taxed based on rates and tax tables available on the HMRC website. So the push right now should be for businesses to be moving to electric vehicles. One, for the capital allowance benefits. Two, for the fact that you've got some of that. You get the £3,000 depending on the value of your car that you get from the government for the purchase of this, discounting the price of the electric vehicles. And there's also the environmental benefit that obviously low emissions, and you're basically helping keep the environment safe. In terms of the capital allowance benefits, they're maximizing that, helping to reduce corporation tax by a significant amount. Next. Are there any questions from the audience?
Yes. Hi, Robert. Let me just go through some of the questions that we've had in here. So, first question in from James: what would be the likely impact of the 1-year freeze on alcohol duty from February 2022 and the reform to alcohol duties with all products taxed in proportion to their alcohol content, i.e. standardised set of bands and new rates for low strength products?
Yeah, I think for most people who frequent the pubs or those who just enjoy a drink of alcohol from time to time, this is a welcome one. And I can imagine that those who drink lightly will like this more than those who drink heavily or drink products with high alcohol content. In effect, it is sort of motivating us and trying to drive us all to drink lightly and to consume products with less alcohol content. I suppose the impact will be that those who are selling low alcohol products will see an increase in their sales, and the high alcohol content will probably flatline, because there will still be some people that will not give up on their Johnny Walker anyway. So I'm expecting that we will see more people drinking and drinking at a consistent level, possibly not even mixing drinks, but consistently drinking lower. Yeah. And it's a welcome boost for the industry because if everybody's taxed the same, it's not essentially fair, because you will see that there should be a tax there that is aligned with the alcohol content.
Okay, got a question here relating to business rates. So how would you assess the various changes to business rates following a review, including the new temporary 50% relief for retail, hospitality and leisure businesses?
I believe that's a really welcome one. I think it was highly anticipated. First of all, the freeze there is fantastic. The benefit really is to the 400,000 restaurants and bars we've got out there who have gone through a really, really tough period during the pandemic. They've been asked to close. Many of them were mandated to close. This business relief up to 100K per premises or per business is really, really welcome boost. And I think that would help reduce their costs and would allow them obviously do more with the funds coming in. So anything to help reduce operating costs, business costs, will be useful because they now have more to reinvest, more to spend on, or possibly on the increasing national minimum wage, more to spend on goods, or just making the atmosphere in the restaurants better. But other businesses too will benefit.
Okay, I've got time for another question here. I'll just move on. This is relating to property. So how would the reliefs for property improvements for the year after they are carried out affect UK property investments from 23-24?
Yeah, I believe that should mean that people or investors are more geared to make those property improvements now and to take advantage of that benefit. So we should see construction workers getting even more work. I know they didn't stop during the pandemic, but getting even more work. And whenever there's a boost to construction, there seems to always be a boost to every sector in the UK. So that's a very good one. And I would expect that over the next 12 months, the activity drums up and there's a lot of improvement activities here and there. And it can only be good for all of us because everywhere you go looks nice and people are making improvements everywhere. So
yeah. Just one from me, actually, Robert. You mentioned living wage a few minutes ago, and minimum wage. With your clients, how are you seeing them prepare for this increase in the national living wage?
It's one of those where it's sort of a triple whammy, because when you're looking at wages, you've got a net wage element, you've got a pension, you've got the PAYE and payroll or the payroll taxes impacting you. So businesses, obviously, some of them are looking at their resource requirements and saying, okay, how many people do we really need in this place, and what do we need, and being more careful with their hiring plans. Other people that cannot do without it are still hiring, but then putting money away, putting some savings away to accommodate that. You will see some businesses increasing prices slightly, but the overall impact is going to be a boost to the economy, because like I was saying before, when employees are paid well and they are paid better, the performance increases, the businesses grow, the businesses grow, their own spending power increases, so they then go and spend more. So, say for example, somebody works at Asda and they've got their wage increases. It's very, very likely that they're going to spend part of their wage increase at Asda. So for Asda, it's actually a boost. And just using that as an example. And the more people can afford, the more they do with the funds they've got. So yes, businesses have to prepare by saving now, putting some money in the pot for that increase, boost business, grow, expand, do whatever they need to make their businesses thrive. Some may assess their need for resources, as we've seen some of them do, but the overall impact should be positive for everyone.
Okay. All right. Well, thanks very much, Robert. We're just about out of time. For anybody watching, we are going to have recorded this webinar, so we'll make an on-demand version available on our website later on today and through our social media channels. And of course, if you need to get in touch with Robert, just go to the website at rjohnson.limited. You can get in touch with Robert directly there. And we look forward to our next one. Thanks very much, Robert.
Thank you very much, Joe.